my God, this is now how I'll be homeless in a random country. I ran out of money at some point paying rent, and I had a problem with my landlord. So I had to ask for money from my friends, and I said, if anything, the only thing I learned about money from home was that I should live within my means, and I didn't do that because now I ran out of money. So I just went to Google, like, how can you save money and not finish it? Because I remember being in high school, I would, like, if I find something nice, I would save up for it and go and buy it. But now I realized the issue was that even when I saved, I used the money before I needed to cover like basic things. Even though there are people who have like an income problem, the majority of people have a money management problem, and it stems from various things, whether it could be how you were brought up or the places you were found in, that school, church, like just different places. We pick up like money habits in different places. If you are earning 3,000, the first thing would have to be acceptance, saying that this is what I have. You can't just be like, oh, but at my stage, I deserve to be earning 15. So now you want to be living like you're earning a 15,000, right? But in the case, in that case, you actually have to look at what you have and see, what can I really do with this? If it means staying at home with your parents, which you may not like, you may have to do that. But most of us don't want that. Most people don't know that to be a good investor in whatever you're going to invest in, there's some level of understanding of saving that you need to get to. If you can't put money aside and let it sit, you won't do well at investing. So if you're going to just want to skip to the investing part, it's going to cut you at some point.
Chipepo, so this is called Duwit. So in this segment, we're going to just look at some practical steps to start investing. So you're going to walk us through that.
All right. So in general...
Hi, Chipepo.
Hi, Mwaka.
Nice to finally have you here.
Thank you so much for having me.
So I'm ready to talk about money. I want you to teach me everything about money. Everybody has a story, you know. Everybody has a start. Everybody has a beginning. So like growing up, how was people like? What were you interested in?
Okay, I think that question is like hard to answer generally, because obviously like which angle, but the fact that I'm here because of me talking about money, I'm like, should I think about the money side? But growing up, I was like, okay, I would say I was antisocial, but very talkative and very independent even as a kid. Like I still remember that in reception, my mom told my aunt to drop me off at school on day one, and when I was going, they were like, please pay attention because you're coming back alone. And that was it. Like I was never taken to school. Like I went on my own and all that. So I really started handling money at that point, because like when I was using buses, I had to pay and things like that. But if I'm like now looking at maybe an older version of Chipepo, that's like high school, I think there and now I was very expressive. Like I was the type of student that maybe almost everyone knew in class, because I would like answering questions, giving my opinions, and at home they would tell me, probably you have an answer for everything. So I was that kid. Like I would not hide what I'm thinking, or even when I don't know the answer, if I have a thought, I'll just like share it. And then maybe it's just okay, no, it's not that, but good for trying.
So do you think you get that from?
I'm not so sure. Maybe there's a bit of genes, but also I come from, so I didn't grow up in one home. I grew up in different homes, I would say. But then in every home, I think one thing that stood, like that was consistent, is that we were allowed to express ourselves. It wasn't that thing that if people come in the living room, you have to leave. You only answer when they are no. Like we were allowed. I knew even when I would respond and they'd be like, sometimes you need to be quiet, but it was never like in a scary way where I actually exercise it. I knew that, okay, now I can say something. So I think it came from that. Yeah,
and then interestingly, I was looking at, when I was researching on you, I found that you studied something very completely different from what you're doing now, you know, financial literacy. Tell us about that story.
And I must say, Mwaka, I was actually really impressed on that one. I'm like, okay.
Where did you get this?
I'm like, okay, this is good. Because sometimes people ask you questions and they're like, do you really follow me? But I studied biology accidentally. Yes, accidentally. Like I didn't plan of course, I knew that I would study something like scientific. I wasn't just sure on what. I like during my entire life, I went through phases of like when I was younger, oh, I'll be an accountant. Because like my mother would be like, oh, you're good at math, you can be an accountant. Then later on, it's a new thing. Oh, the first thing I ever wanted to become was a pilot. I don't know where that even came from. But long story short, when my grades were good and my uncles are like, oh, you can study medicine, as you like going to high school. I'm like, oh, it wouldn't be a bad thing. Like I didn't like it at all. So I remember researching scholarships and everything, and I'm just like, okay, I can't find anything on health. But I came across something to do with the Zambian scholarships by the Loans Board now. It was BC then, Bursaries Committee. And it was for me to study, pharmacy. And I was like, okay, it's pretty close to medicine. And hey, school hammered me. You know how you have the natural sciences first, then you qualify to do the actual
I remember
thing.
that as well.
When I just failed like a lot of modules in the first year, I knew that okay, we're not becoming a pharmacist here, but let's see what we can do.
What else?
I continued just like, okay, I finished everything. Eventually I passed, of course. But then at that point, I was like, I don't even want to do a long thing, like a long course. I just want to get into the major. And there were like two options. There was either geology or biology. And then the biology, there was human biology. By diversity, I can't remember the third one. But I was just like, human, no. That's how I just picked. I was like, plants and animals, not so bad. And that's how I ended up doing biodiversity. Of course, I liked it, but that was how I chose it, really. And yeah, is this where I now say how I got into the finances?
Yeah, this is where now you connect the dots.
Okay, so while I was studying, because as I said, I failed, so I had to repeat a year. And just as time went on, I also saw that I was running out of years for for the BC, like for me to continue receiving a stipend. But then during that period, it's a story that I've told even on like the platform. Finances with Chipepo, that is. I ran out of money at some point paying rent, and I had a problem with my landlord. So I was like, oh my God, this is now how I'll be homeless in a random country. But yeah, so I just started researching because I said, no, something has to give. I had the money, but I was just tapping into it until it finished. So I had to ask for money from my friends, and I said, if anything, the only thing I learned about money from home was that I should live within my means, and I didn't do that because now I ran out of money. So I just went to Google, like, how can you save money and not finish it? Because there are times I'll put money aside, but go back for it. Yeah. I'm like, how can you like start keeping your money in a way that you don't run out? Because the issue wasn't really me keeping money. Because I remember even in high school, I would, like, if I find something nice, I would save up for it and go and buy it. But now I realize the issue was that even when I saved, I used the money before, like, I needed to cover, like, basic things. Yeah, so now I was just, like, researching. I read articles, YouTube videos, and things like that. And it became exciting because I felt like there was light at the end of the tunnel. Like, just listening to what people were explaining, I was like, okay, I think this makes sense. And that's how I now like started sharing with my friends, because I was like, when we receive our stipend this time, we have to open savings accounts. I was just telling my friends then. And when the next stipend came, I actually went to open a savings account, and I started saving even coins. Like I would count coins, and I loved that. I would just drop off, go to the bank, deposit, and just see like a balance increase. And from there, I was like, my friends will hate me because each time we sit down, I wanted to talk about money, nothing else. So later on now, I created an anonymous page on Instagram where I started sharing about it. And after that, I lost my password. So I was like, I'm running out of names. I was like, financially fit. Let me just use my name. And that's how I started. So basically, it was accidental. Never planned for it, just out of brokenness, really.
Yeah, you know, the thing I love about that story is like you went through a struggle, and then you found a solution to your own struggle, and now you're sharing with other people. And I think that's what I've read even like from even successful people. They use their struggles and then they solve that problem, and then they're able to share it with other people. Oh, that's a really interesting. So you wanted to be anonymous, no? You wanted to be...
I wanted to be anonymous because I also came across some anonymous accounts. Most of them were like by Americans, Europeans. So I was like, I guess I could also share. Like I didn't really even though some friends knew, not all my friends knew that I was that crazy about talking about money. Yeah. So I was like, nah, let me just keep it anonymous. But that didn't really happen. Look at us now.
Yeah.
Yeah.
Yeah. Okay. So you talk a lot about savings. We'll get into that. We'll talk about the money.
Okay,
yeah.
sure.
So you talk a lot about creating like financial literacy, being a gateway to financial generational wealth.
Yeah.
Why do you think that is important for people?
So I feel like a lot of people, even though there are people who have like an income problem, the majority of people have like a money management problem, and it stems from various things, whether it could be how you were brought up, or the places you were found in. That could be school, church, like just different places. We pick up like money habits in different places. But when it really comes to tying it to generational wealth, you realize that most people have just enough money to keep them from the time they start working up to the time they retire. So it's like as long as they're actively earning, they are fine. So and when they retire, that's it. Meaning now, before their life even comes to an end, if they live long enough, they don't even have enough for if they have to molest boys that are still in school, they can't even pay for them. So they can't even like support that generation, the one that they've created. But then when you look at now the people who are literate in personal finance management, they will know that when I have children, I have to at least plan to the point that how are they going to go to college or whatever they decide to do after high school. And if I died, how are they going to live? It's only really someone who thinks into it long enough into that will realize even if you have the best job, I think we've seen this, it doesn't matter, or you have the best business. Once people die, most cases we see that the people, the children just suffer, or if they had parents relying on them, they also just suffer because really they didn't leave anything. So for generational wealth to be a thing, you actually have to have more information or more data, more knowledge on just beyond earning an income. Yeah. So that's how I think it ties into it.
Okay. Most of the time, like, you're only able to support yourself when you have a job until you retire. But if there's no job,
then if it even happens to you, like before retirement, most cases people just like they lose it. They can't even exist now. So it's like I have no income. Like I have no active income. Actually, let me put it that way. So it's like people are just good to like to the point that they can have an active income, and then when that is taken out, you find that really there's nothing to live for themselves or for the next generation. I
think that's really common, especially when parents die, or they have some, like when they have a business and then they die, their children start suffering. And again, it's also a matter of passing down those habits to your children, isn't it?
Exactly. So God forbid those who even just get retrenched, then the suffering begins while they're still alive. The parents are alive, but now you can't even like take care of your home or anything else because of that. So like you have to pass on actually information that will help. Obviously we'll talk about that, but like God will help one to manage the money that they're earning in their active income period, because most people have that. Depending on the career you're in, others it could be at the beginning of the careers, others it's like maybe like mid, others it's like with politicians, I would say usually they earn a lot as they go older. So we can see that we have a lot of old ones. But then there's some cases where you even like musicians, soccer players, most of them earn a lot as they are starting or when they just like reach that mid. So that's the active income earning period. And like it's very important in that moment to have resources that help you now know how you can prolong that money, make it outlast you if anything.
So what are now like personal financial bad habits that most people have when it comes to, of course, finances and then investing as well?
Okay, sure. So like I wouldn't be finances with your boy if I didn't give examples of myself or other people. That name comes from like me sharing from my lens. So some things are, I would say, almost unconventional, because I'll not really just speak from theory. I like to speak from like the examples, real life, whatever happens around us. So the number one thing that I personally noticed, even in my own case, the money we were receiving was a lot, guys. We were receiving $1,000. It was for 4 months, but sometimes it would go to like 5, 6 if you're delayed, like months, that is. So maybe you have 1,000 to spend over that period. But you're a student, remember? And then we also, on top of that, we had like each month we'd receive, I think, $100, if I'm not mistaken, from the hosting country. So really, the money was enough. And that's why most of us, when we would get the money, we would rush to just buying like food, you know, and when I say food, I don't mean food to cook at home. No, like takeouts and clothes, like you just rush to the shops, you start buying all the fancy things. People change their phones each time they receive that money. Like, it was enough. I had Apple products, really. Things like that, of course, with a bit of support from home. But either way, like, it was enough to, So what I noticed is it's the spending habits. That are the like number one thing. Most people have this notion that it's not having enough. But I don't know if I can share about it. There's a program called Duwit. I think I highly recommend people to check that out, because when you watch that, you see that it's really, for most, like maybe 99% of people, it's not a case of the income, it's a case of the mindset and the spending habits, because people receive like a 3 million and just blow it in like 2 months or something. So coming back to what I was saying, so it's the spending habits first that really, really, really just hinder us from making progress on whatever it is our goals are financially. You'll find that when we're earning, we are usually spending in terms of what we believe our life should look like, or what I deserve. I'm a degree holder. I should be living in a house that looks like this. You know,
I struggled a lot.
Yes, I struggled a lot. So I should drive this car. You know, I'm in my 20s, so I should, like, it's usually that. And when I say this, I don't mean that you're even spending lavishly. No, it's just that if you are earning 3,000, the first thing would have to be acceptance, saying that this is what I have. You can't just be like, oh, but at my stage, I deserve to be earning 15. So now you want to be living like you're earning a 15,000, right? But in that case, you actually have to look at what you have and see, what can I really do with this? If it means staying at home with your parents, which you may not like, you may have to do that. But most of us don't want that. Like, obviously, if I start speaking about other ways you can supplement your income, that's a different conversation altogether. But the number one thing is the spending habits. Noticing how you impulsively spend. You go to your shopping malls. You go to, I don't know, can I say China Mall, guys? Because, it's like, no, don't advertise one. But like you go there, you're like, no, I just need a flower pot. And before you know it, you're coming back with hang wires. Hang wires, because me and my sister bought hang wires last week, and really, we could have lived without them, but we said we needed them. Just a small example, but before you know it, 500 kwacha is gone. And that's a 500 kwacha that you could have set aside to either maybe start your studio, your recording studio like this, or something else, right? So number one is really just the spending.
So it goes down to habits, isn't it?
It really does. A lot of, like, the same example you're giving, it's like, but my mother,
she took care of
yes, she did, but maybe this is not the stage you have to like reward her with a whole vehicle and things like that. So I like that you've actually even used the word habits. So we can just, like, apart from saying spending habits, also the mindset puts us in different habits that we have, like the mindset we carry. So maybe you could come from a home where they never bought you nice things, even when you saw that your father has been paid. So you're like, now it's my money. So I have to, like, spoil myself. I would even say over spoiling yourself. Like, how many times will you spoil yourself? Really, realistically.
Sacrificing your future. So a lot of people avoid investing. Like, you're trying to, like, instant gratification, right? You're trying to, when you have the money, you want to use it right there and then. And most people have that fear. Why do you think so?
Okay, so I always say that one thing I've noticed anyway is that a lot of people, even when they come to, like, say, oh, Chipepo, can you help me with this? I want to understand this. It's usually that they want to skip and just go into investing. They just be like, how can I invest my money, and how much can I be getting per month? Do you know anything that can give me at least 50% returns per month? Like, those are the questions I get, no lies. And like I've mentioned already on spending, there's this thing I call the personal finance bootcamp, because I noticed the gap that was there. Like, a lot of people, once they say, I'm now going to learn how to manage my money, most people mean I'm going to start investing so that I can make a lot of money. They don't really mean I'm going to be disciplined and stay home and not go out and be drinking a lot. That's not what they mean. So like, I start from talking about spending, then I talk about budgeting. A lot of people look at it as a restrictive thing. Like, oh no, I just feel like, why should I budget and then it's holding me back? You are the creator of the budget. It means you're the one who's trying to be restrictive. And why? It's because you're just shooting too high. Like, you can't move from just spending your money as you want and the next thing you're saying, I'll only spend 500 kwacha on fuel. How? When you're moving around chalala, you go to Zalama Park, because your habits will have to match the money, right? So even when you're going to create a budget that is going to work, I call it an effective budget, because that's what is going to differentiate it from just general budgeting. You have to actually think of how you're going to adjust your habits. Then when I talk about that, I move from the budgeting things, I talk about different styles of budgeting and what, of course, you guys can research. Then I talk about the saving. A lot of people feel like saving is wasting money. But I'll tell you this, I know I'm going to investing, but I just want to break down the fact that most people don't know that to be a good investor in whatever you're going to invest in, there's some level of understanding of saving that you need to get to. If you can't put money aside and let it sit, you won't do well at investing. So if you're going to just want to skip to the investing part, it's going to cut you at some point. So now coming to the investing thing, people don't have a problem with investing. They have a problem with investing in some of the things I talk about.
Okay.
How, just maybe even in a few seconds, how did you like come up with like having all this equipment? I've seen you've got nice equipment. You've made up this place. It looks good. Did you just like come across a big chunk of money and you bought everything?
No, I had been saving for like 1.5 years.
And then you invested in this. That was an investment.
Oh, okay.
Yeah, it was an investment.
Yeah.
So you see, like, a lot of people invest in their education, like they have no problem with that. You see, no, Apana, I'm trying to move from having a diploma to a degree. They may even get a loan and actually invest in their education because they strongly believe in the returns they'll get. Like, no one really even has to convince them. No, I need a master's. When I get a master's, I'll get a better job and I'll have more money, what, right? And now, speaking from the Zambian side, we've seen a lot of people buying land, building. That's investing. So they have no problem buying land or buying property or building because they already are convinced on the returns that they'll get. Whether they've seen them or not, but because of so many people around us, or even just maybe their own parents or someone they know at least did it and they've seen it happen, like work. So people have no problem with investing. Even you don't have a problem with investing. Maybe you have a problem with investing in certain things. It could be different, yes. So in certain things. So now coming back to the same thing, it's that for you to get to a point where you can actually invest in those things, the same discipline that you use to save up to invest in your studio is the same discipline that you can even use to invest in whatever it is that we share about. But the only difference is that you have to be sold on it. You have to understand it. Because you understood what you'll be getting out of this, it was easy for you. And this is why now I tell people, because obviously I can openly say the things I invest in that I usually talk about are things like government bonds, the stock market, and because I researched so much. Like, I researched so much that you could wake me up at 00 and I will explain to you, right? Even before I ever put in like a 1 kwacha, at least I knew things that could happen, how things could go right or even go wrong. But most people will just come and say, Chipepo, how much will I get if I invest in the stock markets? If I invest 5,000 or if I invest $1 million? I don't know. I can't give you that answer because there are a lot of things you need to learn. It's the same way if I asked you, how much can I get if I invested in having a good podcast? Would you be able to tell me that, like, just like that, no, right? It's big. So they say, like, people are not investing enough in learning. They want to just find out how much they will get if they invested in something. And that's why they're not investing in those particular things. So really, that's the only barrier. And that's why I'm more on, like, learn. Then it makes it easy for you to invest. Because you can even say, you know what, after understanding all these things of yours, I don't think I want to invest in that. I'll now pick something else. But if you don't know, if I just tell you, if you give me 5 pin or you go and invest 5 pin, you'll get 10,000, so you get 100% profit or whatever, right?
Yeah.
You'll be like, that sounds good.
Yeah, sounds good.
But if I tell you, no, but the stock market can crash, just like how a company performs, it could make losses, and when that happens, it means you've made a loss. Or like a bank that we know of that closed down, if it closes down, it's on the market, it means all the money you put in there,
it's gone.
That's all. You won't get it in most cases, because the priority will be the people who saved with the bank and what. Once you understand that now, you will now think it through. Like, really, okay, so if I'm going to invest, I need to look at the company, what. And those are the things that people skip through. So it makes it hard for them to even be convinced to invest in that particular thing.
Oh.
Yeah.
Wow. Wish there's so much to unpack from there. Yeah. So I think what I've learned is understanding in what you're investing in.
Yeah.
I think I've also seen that a lot. The quote to say, don't invest into something that you don't understand.
Yeah.
Wow, that makes a lot of sense.
Yeah.
So because I understood, for example, like the same podcast, I understood to say, okay, if I invest this money, or at least at some point I know that I'm also like taking a risk. It might not work. It might work. It might also not work out.
That the risk part. Like most people don't want to know the cons. Most people just want to know the pros, or they'll feed themselves with the pros, and that's it.
Oh yeah.
So
like trying to say on the positive side, even though you know that something might happen.
Yeah, and the worst case scenario, of course, is like if I only know bad things about starting a podcast, what will happen? I would not want to put my money in it. Yeah. So now look at people who are investing in it, like, these people are just crazy. They're selling us a lie, because I only know the cons. Yeah. So
that resonates, because I'm also like hesitant into investing something I don't know.
Exactly.
Even though somebody's saying, okay, you get maybe such returns, but if I don't understand it, I'm like, I'm a little skeptical.
Yeah. So it's just like that knowledge information gap, and what we don't want as most people is getting things from people who just speak from theory. So normally they'll be like, you yourself first show me. Have you even ever done this? That's what you want. And that's a good point, actually. You want to not just hear things on paper, because you can pick up any economics book or whatever and read. Maybe there's even like investing in this for dummies. Those books are there. But like if you read it and you only end there, you don't know anyone who's done it, or you're not really talking to people who are actually doing it, it makes it a bit hard.
So now, having talked about that, like identifying your habits, like how you grow up, so you also go back to the roots, like where you came from. That's also important.
Yeah.
So now, how do you advise people to build healthy financial habits, especially if they're on a tight budget? Because that's what I've seen. That's the common complaint that I see is people not having. No, I'm on a tight budget. I only get a 3,000.
My pressure.
Yeah, so it's hard. I can't even invest. Yeah, you're telling me to invest when I get a 3,000.
Yeah.
I'm sure you've seen those conversations, or you've had maybe people that you've talked with that give that as an excuse.
Very much. I think almost daily there's either a comment, a message, or something related to that. Yeah. So, okay, obviously if it's like a one-on-one thing, it changes the whole thing. Because me right now, when you just said, I'm like, okay, so why are you on a tight budget? Like, what's on your budget? Most people, if you ask them that, they won't even tell you what's on the budget. They'll start saying, no, family, responsibilities. But then you're like, no, tell me in depth. Tell me, no, this is how much I'm giving my mom. This is how much I'm what. Most people don't even know that. So they are really not, I call it like using like a magnifying glass into your expenses. Most people are not doing that. We generalize things. So you may find that if your biggest expense is rent, you can just be like, rent. But like, where is the rest of the 3,000 going? But anyway, regardless, the thing is also we've fed ourselves with this notion that to invest, you have to have millions or a lot of money, like thousands. And when I tell people like there are options where you could literally just put a 200 kwacha every month, then they're like, but what would be the returns? But like, don't you think if you're putting like aside a 200 kwacha in an investment, meaning it's growing, if you did it for like a year, would you rather not have that amount? Like, it's fine. I would rather just end the year without having had set aside that amount. So if you're getting a 3,000, best believe there's a time that you didn't have that 3,000. So you can live without the 3,000 in short. Like you didn't die when you didn't have it. Hard to think of or hard to believe, but it's just the truth. So let's say I took out 100 kwacha. We just said, there's this new thing, like when Nima came, right? We all just accepted that on our pay slips now, Nima is getting an amount. we didn't go to HR crying like, oh my God, my 72 kwacha, now how am I going to buy that tea? We didn't do that. And that's how investing is as well. If you just started with the smallest possible amount, so you could just say, okay, I can't take out a big chunk, but I'll just say I'm removing a 50 kwacha and I'll pretend that I'm only getting paid 2,950 kwacha. Trust me, you will actually do the same things you've been doing on that 3,000. And for like, that's really true for I think almost everyone. Very few people would find a difference, but yeah. So you get that 50 kwacha, you set it aside. Obviously, you should have researched first what minimum things you can do. So if it's like, oh, you can only invest in something that requires you to put 200 kwacha aside, you can say, okay, every 4th month, is my math right? you'll be putting, you'll be putting the 200. And in most cases, I've noticed the argument is that, but what will, if you invested like only like 4 times in a year, 200, be like, oh, but what will that money do for you? It's not what the money will do for you, it's what that will do for your mindset. The discipline that now unlocks, the thing I was explaining about me, like going to deposit those coins. I started now spotting opportunities for making money, like extra money, so that I could save more, but also not just also cutting certain expenses. You can only cut so much, so obviously you have to start looking. And in my case, at that moment, I started I would look for schools that would teach like primary school children to teach English, because I wasn't in an English speaking country. Just an example I'm giving, right? That stemmed from the fact that when I saw my coins adding up, I was like, I want this, but I want it to grow bigger. So when you start putting aside that 50 kwacha, the next thing you know, you'll be like, I don't know if I can use Bemo.
Yeah, it's fine.
Like at my age, 50. I think I can do 100, you know? But then you're like, but it's still the same amount. So what can I do? You start looking into your talents or to my extra things you can do. I have seen this like with evidence. Like my friends just now start selling things or unlocking new ways to actually earn money. Why? Because they challenge themselves to invest or to save. So really, you may be on what we're calling a tight budget, but like I said, use a magnifying glass and really break down that tight budget. Where is most of your money going? Why is it going there? Are you happy with where it's going? Are you okay with that? Is it something you can adjust? But also start playing pretend. Like if the bank just sent me a 2.9 because 100 kwacha has been taken to NAPSA or something, how would I handle this 2.9? And do that. You can maybe set up a deduct or actually do it manually if you are disciplined enough, hopefully. And then as you go, your mindset is what will now trick you into doing more and seeing opportunities for whether it's polishing up your CV, like just no longer being comfortable in that place.
So what I get from that is, even if you are saving 100 kwacha or 1 kwacha, it's not the money that you get after the year. For example, if you're saving a coin a day or something, and then maybe at the end of the year, you get a certain amount, which is less than 1,000. So it's not the money, it's about the habits that you're building.
Yeah, because if you don't build those habits, that's how you now feature on I Blew It. Because even the day that whatever happens, you come across some good money, the same habits, the way you've been spending that 3,000 is how you're going to spend the million. Most people will be like, oh no, me, if I receive that money, no, you won't. If you have the habit of just like money comes, money goes, regardless of the amount. I think a lot of us in the communities I've created, sometimes we talk about like meds. Some of my clients have started teaching their meds about financial literacy. And I remember even myself in Mansa, there's a time my helper asked me for, I think, a 500, like if I could give her upfront or something. She said she wanted to pay an outstanding balance on a plot. And I was like, me, don't even have a plot. This lady, yes. But that's not a fantasy or a fairy tale, no. Most of the serious workers that we are paying even below minimum wage, because to them, they can't even dream of that 3,000 that we are complaining about, or that 5,000. They see how they can make that work. They find out, where can I find land that I could still do my pieceworks for and I would be able to pay it down slowly. So they are looking at that amount. So obviously, yes, maybe if they got a bigger amount, they might blow it because they're so overexcited. But the common thing is that at least there'll be some level of like, okay, you know what? I can buy some assets because I've been doing that on the small amount. But if you don't start on what you have, it will be very hard for you to even adjust. And I've seen this a lot again in Lusaka. I remember someone telling me they get 18,000 per month and they are choking in debt. And also how to just balance things. I'm like, hey, I never even got that amount when I was working, but I literally retired because my investments could even take care of me. So things like that.
Just one point as well. Sometimes you, of course, when you're moving up the ladder, your career, you start earning more money, and you find that you start earning more money, but you're still struggling and you still want more. Then you get to this level, like, oh, if I can only get to this level, I'll start saving, I'll start doing all these things. But when you get there again, it's the same issue.
Yeah. Mainly because it's a natural thing for most of us to inflate our lifestyles. Obviously, if you start earning more, you're like, now is the time to move into a better house. Now that, for me, I love tea. So when I see more money, I'm just like, now I can buy that fancy tea I saw. So it's things like that. You just now like really spot out. One thing is, most people will never have a problem with how to spend their money. It's just the money itself that we have that usually restricts us. So whenever it goes up a bit, you can easily just jump on like the next thing to fit into the entire amount. I usually say that we just want our money to finish. When it doesn't finish, you're like itching. We just want to spend it. Like we're not.
I think I get. Yeah, you're not used to having money.
Yes, like we're not. Like it has to finish. That's when you breathe. Now you're waiting for the next amount, just like that. So it comes inside.
I think I also used to have this feeling where when you don't have money to spend, like you have peace. And then when you have the money, it's like you're itching. You want to find places to spend it.
Suddenly there's something to do at the mall. Meet a guy, you will find things all the time.
So what's the advice?
I think the advice is the entire podcast. But anyway, you have to at least sit it out. Like when your income goes up, I lived in a bed-sitter. And my income went up like 3 times before I moved. And to some, like I could see, like, people will roll their eyes, like, this person also. Like, even now, you can't, change this or change that. But for me, I had a go. I like nice things. This is the reason I started learning about money. So I know, like, it's inevitable. I will get to the nice things, but I don't just have to do it immediately. Like, I'm trying to prove a point. So, like, I will wait it out until I really sit in that new income. I put it aside to whatever it is that I want, and then now I can later on move to the next thing. I remember I stayed without a fridge for a long time, and people ask me, like, how did you manage? Like, close to a year. I remember, like, for me, I looked at the price of the fridge I wanted that time, and it was my salary. I said, it won't be me. And my mom was like, Chipepo, anyway, you can just put it on lay-by, maybe pay it off like in 2 months or 3 months. And I said, that's the problem. I don't want to do that. Like, why is a fridge having to be a thing that I even have to really like cut such a big chunk from my income? So what I said is, I'm going to aggressively invest. Obviously, one of the things I talk about, but like aggressively invest. And then when the returns are coming in, that's the money I will use to buy that fridge. And I did that. But that took a lot of waiting. Like I had to delay gratification because I remember looking at the fridge like in January and I only managed to buy in October. Yeah, but that's something that someone else, obviously I worked with people, others would just like, I want a TV and they'll get it. But maybe a TV is even different because you'll be bored and what. You can, and that's the thing again. I'm not saying you can't put things on labor. You can, but you have to really weigh the things that can wait and the things that could be done right now. But you can't say everything is urgent. Like, what kind of life is that? You have to wait out certain things.
You always have to wait it out and avoiding instant gratification. And also, I think it also comes from what will other people think of you. If I don't have this in the house, for example, a fridge, somebody visits you and you don't have a fridge. What if visitors come and they don't find a fridge?
With a good job.
With a good job.
You don't have cold water.
What got on a fridge?
But like, this person will go. Me, I'll remain alone. I'll be the one thinking about all the money I had spent on a fridge or things like that.
I think that's the biggest issue as well.
Delaying gratification is very good.
Chipepo, so this is called Duwit.
Okay.
So whatever visitor I bring here, I make sure has to do it. So you don't just have to talk, you have to practically show our audience if you really know what you're talking about. Yeah. All right. So on this segment, we're going to just look at some practical steps to start investing. So you're going to walk us through that.
Yeah.
So investing bonds in Zambia. So it's going to be very specific, Zambia, and then understanding bonds, then getting started, then a practical demonstration, and then also the key tips that you'll give us. Okay. So you're going to briefly maybe define to us what bonds are and what their benefits are for beginners, for people that don't understand what bonds are.
All right. So in general, like we do cut it usually when we say just bonds. There are different types of bonds to start with. So a bond really is just like money that is collected on, like, we can call it a loan basis. I'm trying to use lay terms as much as possible. So for example, Duwit wants to expand, and you're like, oh, we can't like really do it on our own. And then you can create, your company is registered and everything, right? So you can have a bond. That means that we will be invited as the public to, or just like maybe you just invite certain companies or whatever, to put in money that you return to them with interest. So that's going to be a corporate bond. So institutions also give bonds, and that means they just allow you to invest. You put in a certain amount and they'll tell you the interest rate that you can expect. That's the thing about bonds. You will get the interest rates beforehand, so you will know if you're like good with that or not. Then there are also government bonds, the most common, I'll say, in our case, especially in Zambia. So this is where the government is just basically getting what I would say loans. We are the lenders, they're the borrowers, and we will get that money back with interest. Obviously, they're not just getting it, going to use it. So the government doesn't only get money through tax, they're different things. An example I like to even share when it comes to bonds is during COVID, there was even what were called COVID bonds. So because obviously COVID was like a lot of uncertainties there, like, oh, what if it's serious here and we need money for what? So really they put out a COVID bond and people could loan out money to them that they can use for anything COVID related. Yeah. Then we also have what are called green bonds. So green bonds is just like if the institution that is offering that is going to invest in something, or even the government can do it, is going to invest in something that's like in sustainable development. So things to do with solar in our case, with the whole load shedding things. Yeah. So biodiversity, something that would be called a green bond because for like sustainable what.
Yeah. Okay.
Yeah. So that's just in simple terms. But now government bonds. So those are offered through the Bank of Zambia in Zambia. Yeah. Let me just say through the treasury, if you're even thinking about other countries, so the main bank, obviously, yeah, that's on what we call the primary market, meaning when they offer, you are literally giving them like the money, the government that is, through the Bank of Zambia. But why even included primary market? Because someone out there may be thinking, oh, there's a bank that told me they have government bonds. That's the secondary market now. So the bank itself could be selling a bond that they have, like someone else takes it over, or a person like myself, I could be like, you know what, I can't wait out because there's a specific period, obviously. I'll explain. But yeah, so I'm saying, okay, I want to get rid of this bond, so I want to sell it so that someone else can have it. Like they're the ones who'll be now getting the returns. So that's now the secondary market because they're not getting it from Bank of Zambia, but like they're more like inheriting. But yeah. Anyway, so with the government bonds, the first step is you need what is called a CSD account. So that's the Central Securities Depository account, specifically for government securities in this case. So we have two types of government securities. There's also treasury bills, but government bonds are the long-term ones. So long-term meaning the shortest period in our case is 2 years. Longest period you can loan the money is for 15 years.
Yeah.
Yes. Other countries even have to up to 40 years, yeah. Because there are people who be like 15. Yeah. So how we get interest really is that it's given through what is called coupon income. That's the interest. So every 6 months you're getting something based off on the amount that you give them. So they are not saying, oh, the normal thing I think that we're used to is that if I gave you money mwaka and you have to return it with interest, you probably return, the day you return it is when you also put the interest, right?
Yeah.
In most cases, that's how it works. But in this case, it's like I give you money and it's going to take you 2 years to pay me back. You get it? Yeah. So every 6 months, you'll be paying me something from the interest. But interest, I always tell people, if you go to an institution, it's calculated per annum. So even if I say 6 months and I tell you, oh, it's 20%, I'm not saying it's 20% every 6 months. No, it's 20% per annum, but you've broken it down in a way that 20% you give me something every 6 months. So you're splitting it. Yeah. Okay, so creating the CSD account, as I said, you can do it through the Bank of Zambia investor portal. They've made it very easy now. If you even went to just your search engine right now, you just put in investor portal BOZ, it will come up and you can create your account there. You do need to have a digital signature saved up somewhere. I think these things, you just need them in your life even. Your digital signature, like a passport size photo somewhere. Then you need to have your TPN certificate. What else? Obviously, an email address. The NRC certified copy. So now
that is done online, right?
Online. You don't have to visit anyone. You don't have to go anywhere. But maybe the other folks would like to visit Bank of Zambia, and you can only do that in Lusaka and Dollar. So but even if you're in Sesheke, or you were in Melbourne, Australia, or wherever, you can actually do this. That's the goodness. And I like that it's really linked to your email and not really like your number. So even the OTP, anything, it will come to your email. So you can do it from anywhere. So now you've opened your CSD account. Obviously, you receive that through email. They'll tell you, okay, now it's opened, it's ready. So for you to invest, you can't just wake up and be like, today after listening to this, I'm ready. Now I want to go and invest. No. Obviously, in all things, the first step would be you learning fully and understanding government bonds, because this is very brief either way. But so now though, every month there's an auction date. If you know how an auction works, obviously I can come and say, okay, this is what we have, and you start putting your amounts like, I can pay this amount for it, right? In a way. But with government bonds, it's like the Bank of Zambia or the government says, we are raising this amount, like we want to raise this amount. And what happens is that you will now be like, I can give you a 5,000. Another person, 2,000. Another person, 1 million. So people see those millions that they put and they think you need to invest millions. No. Those numbers, usually, they just tell you this is what we are trying to raise, or this is what we raised. So the minimum is only 1,000 kwacha. Only 1,000 kwacha. The interest rates will be... I won't mention the interest rates because things change. You may be watching this later on. But regardless, they will be the same. Whether you invested 1 million or someone invested 1,000, yes, the interest rate will be the same. And since it's an auction, them as the ones who will be paying back interest, the way they'll get the way the interest rate even comes to happen in brief terms is that they'll start from the lowest, the ones who are just like, me, my money, just give me back with 10%. That's why they'll start from, because they don't want to pay too high, right? So at some points there'll be a cut-off now, like cut-off yield rate or cut-off interest rate, and that's where they'll end. So at that point, if let's say they end at 22%, it means for that particular period that you're giving them money, you also get 22%. But anyway, we move forward. So there are like different tenures. There's 2 years, 3 years, 5 years, 7 years, 10 years, and 15 years. So 6 that you can pick from. You can pick. Obviously, the interest rate is like the lower your period, the lower your rate. The one who's loaning them for a higher, longer period will get a higher rate. So I said that there's an auction every month. So that auction, how you can know about it is that on the Bank of Zambia website, not the investor portal, first, the Bank of Zambia website, there's what is called an issuance calendar. So they release it every quarter. So every quarter you can go there and check for it. So the one for this 2025 first quarter was released in December. So obviously there we can see dates, by the way. In February, it will be on 14th February, the auction. So now you don't actually invest on the day of auction. On the day of auction, they just sort out everything. That's how we can think of it. So before the days leading to the auction, on that investor portal where you created your account, you go there, you check, is it on video auction, but you will see that there will be different auctions that have been put there now. Like for, if you want 2 years, what. So there you just go and put the amount that you want, And it's like a 30-second thing, really. Yeah. And then you just wait, and then the money will be taken out of your account. Then you start waiting for the next 6 months until your period ends. So let's say you are investing in a 15-year bond, then you'd have gotten 30 coupons.
Yeah.
So you'll be getting that rate of return per year, like each year, just like that, until you get your money back.
Now we can share like common mistakes to avoid and tips to maximize returns when investing in bonds.
Okay, the number one common mistake is just don't do it just because you heard someone talk about it. Like, you have to learn first. And I've noticed there are different types of investors. So there are investors who are like me, who wants to learn something, like really learn it, understand it, and then invest in it. Then there are those who are like, okay, I understand on the surface level, but now you people, I want you to be the one to invest for me. There are those. And if you're that one, you need to go and get an advisor so that they guide you. Okay, what are your goals, Mwaka? Oh, you want to retire with 3 million. Okay, how much do you think you can manage to be investing? Do you want to invest every month or every quarter? So they will look at all those details and now recommend, okay, so we'll maybe tell you you'll be doing every like 7-year bonds or 3-year bonds, something like that. Like, they'll explain to you and they'll say, this is how you can now get to the figure that you want, because you'll be getting these types of returns, what. So that's the first step. You should know the type of investor you are. Either you're going to go in depth and learn fully, or you're just going to learn enough to understand what's happening, but get like a licensed advisor to guide you on how you'll be investing, what period you'll be picking, all that.
And where do you find those advisors?
Okay, so there's a list. So there's a list of licensed investment advisors on the Securities Exchange website. Yes, so you can, someone just says, oh, I'm an advisor, and you go to them. Don't do that. Don't do that. So you can, because people get frustrated when they ask me, which one is the best? Which one? I'm like, I can't tell you that. You are the one who has to know. I don't want you to come and cry for me and say, no, you're the one who said pick this one. No, so you can find them on that website, the Securities Exchange Commission website. What's the next step? So that's the first tip, but really it's also a very big tip. And the other thing is, I always say, if you're going to invest and you just say you're going to do it once off, just don't even start unless your once off is really a big amount. Like, if your once off is just going to put in 1,000 or 3,000, those are the people we get frustrated comments from. They'll be like, oh, it's not even a lot of money. What? You have to utilize compounding effects. You have to continue with your 1,000s or your 3,000s. Then you can at least see a significant return over time. You will see the growth. Obviously, it has to tie into your goals. So you have to really look at your goals and see if it aligns. I think those are the top things I'll tell you.
Yeah, those are really helpful.
Okay.
So you don't just have to invest once off and you're like, oh, I have a 3,000 and invest and then forget.
Invest, maybe it's a pension. That makes sense, because they'll even do like what they call staggering. Maybe you do like, instead of putting just such a big amount once, you like put different amounts continuously. Because the thing I said, like 6 months. So if you put in January, every time you'll be receiving. So if you want to receive throughout the year, like a coupon, because some people start living on those, especially in retirement. It's like a rental income sort of, So you could say from January to June, I'll invest monthly, so that the whole year I'm covered. I'll always be getting a coupon. And what you do with that is up to you. Other people, they receive it, they invest it, or no, they start using that for school fees, for household groceries. It's up to you, really. So look at your goals as well.
So if you want to get big returns, invest more money, isn't it? And be willing to...
No, I won't say if you want to get big returns. Because like I said, the interest rate is the same. So such terminologies makes people think, so if you're getting 1,000, it's not enough. No, you're still, if it's 20%, you're also getting 20%. If you want to see significance in like the investment, like, okay, what it's returning me makes sense, because now I can utilize it for other things. So I wouldn't necessarily call it big, but I'll call it significance, because that's obviously dependent on you. But you can't just say, I'll invest my 5,000 once and I've stopped. Then you might spread lies out there, but
Okay. All right, Chipepo, thank you so much for the project breakdown. Okay. You really know your stuff, eh? I like the way you explain. It's natural. So thank you so much. And now we're going to go back to our conversation.
Okay, sure.
Thank you. Thank you for the project breakdown.
Thank
and
you.
Now we're going to go just
Felt
wrapping.
like a sprint.
It felt like a sprint,
yeah.
Like I said, play this video and repeat if you didn't understand the first time.
Yeah.
So now we're just wrapping it up with some rapid fire questions.
Okay.
So short answers or one word answers.
Sure.
Yeah, short. What's your favorite money saving hack?
Okay, yeah. So my favorite is new right now, but saving something each time you spend. Like if you spent like maybe 100 kwacha when you went out to the store, maybe you just put aside a 10 kwacha. Where you put it is up to you. But yeah, just saving something each time you spend.
Each time you spend.
Yeah, it doesn't even have to be like each amount, but maybe like in a day if you spend something, you put something aside.
What's a quote about money or investing that you live by?
So I'll be honest, I don't live by any. I don't.
Okay.
But one I like to repeat, I think it's something like small holes will sink a ship or something like that. Like obviously if it's just one hole, maybe it will take some time, but it may look small, but like the more you have, water just starts entering, and we liken it to spending. It's the small things. It's not even the big things you spend on. It's those sweets that you're in the habit of buying, Coca-Cola every day, buying lunch every day at work. Those small ones, they're the ones sinking your money ship. Yeah.
Wow. I buy lunch every day at work.
You can tell yourself, I'll buy twice in a week, maybe 3 days, I'll prepare something from home. Yeah.
What's the best financial decision you've ever made?
Learning about finances, like financial management, really. I can't wrap it up in just a single thing. But the day I decided I should learn, that's the best decision ever.
Yeah.
And obviously, I'll add to it taking action. Learning is not enough, but I took action, and I like that.
What's one common mistake people make with money?
I would say the fact that people just shun saving. Like I could have talked about spending, but it's saving. Like anyone who just won't build the habit of saving, I don't know what they'll do later if they'll even manage to. Yeah, so just like shunning saving, like just ignoring starting the habit of saving money. Yeah.
If you could only teach one thing about financial literacy, what would it be?
Money mindset. Like people just really have how to change their mindset towards money. Yes.
Are there any books that change your life about saving? Or a book that you
Not
would
saving
recommend?
really, but money itself.
Yeah, money itself.
Okay, so like Think and Grow Rich. These are books that if you've learned about money can even be boring for some, but those are good books like Think and Grow Rich and The Richest Man in Babylon. For me, they did it. But now I know a new book that has come. It's The Psychology of Money. So I highly recommend that people also check that out. I haven't even read it, but I've listened to podcasts about it. I've read articles about it. So I know that it's also good for the mindset.
All right, Chipepo, thank you so much for the rapid fire questions.
Thank you.
It was fast.
No, that was thank you. Yeah.
Okay. So Chipepo, even as we are closing up, any exciting projects that are coming up or anything that you're working on? Or you just rather keep it in the wraps?
Not really. So as Chipepo, anyway, I registered a business, and at the time of registering, it was supposed to be Finances Chipepo, but I couldn't register it under that name, so it was something else. But as I continued thinking, I decided actually it can still work, and that will be launched soon. So because like from what we're talking about, even though it's money, you see that a lot of things tie into it. So I noticed that people are indisciplined in so many ways. People are not consistent in other things, so it makes it even hard for them to be consistent with the money management. So with this new business or the new thing that's coming up, we're going to do a lot of we bring in people to talk about mental health, because all that ties into your money. We bring people who know different things like you. Maybe you tell us, how do you make your money? It's unconventional. I know that. You're not doing the we see him, he's going to the hospital, he's an engineer, and we see what he's doing. So just different people in different sectors to come and share, whether it's about income generating, about how you change your mindset in terms of also tying into maybe getting into therapy, because maybe your habits, you're not changing them, not because of the money itself, but because of your mind and the trauma that you have and things like that. Careers. There are people who complain about they never advance, but they just don't even know how to write a CV or a proper cover letter. No, we've seen this thing. Someone just texts you, I want a job. Okay,
and am I supposed to do
that? Or they'll comment, do you have anything for me? You ask them, what are you good at? What's your strong? They don't know. And for me, there are a lot of things that I need help with. Replying to messages, what? Tell me what you're good at. They can't give you an opportunity if you can. So that would be focused on teaching people what I can call skills, or also just showing them having access to knowledge, different areas, obviously. Yeah, people don't even know how to search for things on Google. You can tell them
Yeah,
and they
it's
don't know
bad
what to start
sometimes,
with.
yeah.
Yeah, so that would be based on that, like different aspects.
Nice. Yeah. Well, I can't wait for that to launch. So where can people find you?
Finances with Chipepo on all social media platforms, really.
All right, Chipepo, thank you so much for coming through.
Thank you.
Was a very educational podcast. I've learned a lot. And things that I never knew about. Yeah, and I can't wait to just watch this again over and over again.
I can't wait. I'll be like, no, why did I say that? But thank you for having me. It's been really fun.
All right, thank you so much.
Okay.
All right.